Good afternoon everyone, and today I'm going to be analysing a very attractive silver market for you all. And the reason I say attractive is because it's showing some really nice bullish signs, which I'm going to be going through later in the video. And I'm also going to touch on the factors driving the price of silver, relate them to the situation in the economy at the moment, and then try and find that really valuable bias that I like to have when looking at the chart. Once I've done all this should give you a really nice balanced piece of analysis that you can use in whatever way you like going forward in your trading. Enjoy. So there's a few factors in the background which drive the price of silver, and one of the most important, or if not the most important, is US dollar stability. And as we may or may not know, the dollar is really unstable at the moment. We're in a clear long-term downward trend. There's talks of more stimulus, and I can see the dollar continuing its slide. The dollar index has actually pulled back from key support levels recently, but I just think this is a correction. I'm liking the continued downside for dollar, which is going to bump up our silver price, because the silver market is denominated by the dollar on pretty much all occasions. Secondly, we have the supply, the silver market supply, and just like the basic rule of supply and demand, the less supply, the scarcer the silver becomes, and so the price naturally rises. The situation at the moment in the economy is that silver reserves are diminishing by 5% per year, and this is likely to keep the price of silver in a long-term bullish trend, which would be really good news for our buyers. And I want to touch on demand, because I know it's really obvious to say if demand of silver goes up, so does the price. We all know this, but sometimes it's hard to tell, is demand rising? How do we know if demand is rising? Well, I've been doing some reading across various sources, and it's actually industrial demand for silver which is increasing the most. So basically this is your companies producing your smartphones, your computers, your TVs, and etc. They need more silver for their production, and if they need more silver for their levels of production, they're going to be buying more silver, and it's going to contribute to the upside in the market at quite a high rate, because these are big consumers. They'll be buying in bulk. And we do have some smaller factors which are quite interesting. They may only have a small effect, but we have China's population growth, and China is the world's largest consumer of silver, and their population is continuing to rise, and if it continues to do so at this rate, this is only going to help the price of silver increase. We have employment rates or unemployment rates. Silver is seen as a luxury item, as we know. In a time of economic uncertainty, people aren't splashing out on these luxury items. At the moment, in the pandemic, high job losses, these luxury items aren't being bought at the rate we saw last year. And this could be news for some small downside in the price of silver in terms of demand there. So now we'll go and have a look at the charts. Okay, so now we've established our bias, which is long-term bullish, much rather like gold. We can now scale in onto the chart and find some positions that will give us the best chance for profit with minimal drawdown, because that's our aim really. We don't just want to be going in and just buying off of the back of fundamentals. And on the daily chart, you can see we had this nice upside in July, and since then really we've been ranging, and 21.5 is a really supportive level. We're kind of bouncing in and around this range, and if I zoom in a bit further, what you'll see is some really nice key daily levels. We have this daily order block which has now been mitigated, and as you can see, if I just label it, daily order block, we actually wicked really nicely out of it, so that would have been a really nice buy opportunity, which I didn't actually spot at the time. And for our target price, I'm looking at this level up here, which is another daily order block. It's near the all-time highs as well, and the reason it's daily order block is this was the last piece of pressure before we had the move to the downside and the break of structure. So what I'm looking for at the moment is really for price to be trading in between these daily order blocks. At the moment, we're approaching fair value in terms of where the market is, but I would say it's still at quite a nice discount. This could have been due to the US dollar strength that we've seen, which I mentioned in the PowerPoint just a minute ago. So I'll be looking for a target of around 27.5, and noting that in here we have this price inefficiency, which I've just set an alert for. And if I highlight that, so price has a bit of work to break through these wicks here, but once it does and gets into this area here, I'm going to see hopefully a nice clean run up to 26.6, which is where I'd put my TP number 1, my take profit number 1, and then my take profit number 2 would be at 27.5 at the start of this daily order block, so I'd expect a reaction. Now, what people do with their trade sometimes is you just put it all in one position and you take half when it gets to TP1 and you leave the rest to TP2. What I do is actually do 2 separate positions. So I would do a position up to TP1, filling the price inefficiency, and then the rest I would move to entry once hitting TP1 and let the rest run to TP2. So that's what I'm seeing on the daily chart, which would be some nice swing trades there. If I delete all of this, and we'll move down the time frames now. So the 4-hour chart, and we're looking for more bullish signs, and I can literally see one right in front of me right now. And this is a slightly different concept. Here you can see this was the previous market structure low. So if you was buying the market in and around here, what I'll do is I'll just replay some of the charts. So if I replay it to here, okay, so this was on the 14th of January, and what you would have done probably here is if you wanted to buy the market, say you saw this price inefficiency and you thought, I want to buy the market up into the highs, where would your stop loss be as a retail trader? Most likely here at the market structure low, right? Because that's the, if you think if price breaks below here, it's going to continue running. But watch what happens. Price runs through. It's doing well at the moment. Your buy. Then it starts to dip. It's heading towards your stop loss. And boom, it takes you out straight away. Now, the importance of this is it's known as a liquidity raid. And what I mean by that is, at this level here, the big players in the market, I drove price down to take out all of these stop losses to grab the liquidity it needs to push price higher. And this is a really bullish sign, I think. And so from this raid, I'll be looking for price. Now, if you'd have got in when this candle closed, I probably would have waited for a nice bullish candle like this. Then we can start aiming for buys. But the potential is still there. Again, breaking through this high at 25.9, which is our previous daily order block, we're going to see some nice price running in through and clearing all of this out. So that's what I'm seeing on the 4-hour, really nice bullish signs. And if I aim for, go down onto the 1-hour chart, can I see any intraday smaller positions? I just deleted that, but I want to put it back in. This was our 4-hour liquidity raid here, still evident on the 1-hour. So now I'm looking for something which could indicate a nice buy opportunity on the 1-hour. And I'm seeing this level here. This level is a key 1-hour level. It's our 1-hour order block. Because I like trading off these levels. I like the reactions from these levels. This would be a nice discount level as well. What we've had on the 1-hour chart, literally where price is now, we had this break, which I'll highlight here. Break of structure. We had this break of these highs here. This was the last piece of pressure left behind. This is the last candle before the upside, which broke the structure. So I'm calling this our 1-hour order block. So what I'm looking for price to do on the intraday positions is price to run into here, and then we can aim for 25.9, which coincides with this level that I put on the daily a minute ago, that alert I set, remember. So the time frames are really aligning at the moment, which is a really nice sign. I'm going to be waiting for price to retrace into here. If I was to buy from this level, if I just plan it out now, and I was to aim for these highs, then we're looking at a 6.9R trade. If I just move that a little bit, yeah, around 6.9, let's call it 7R trade, which is some really nice returns. Other than that, guys, yeah, I think I've found a lot of value for buyers here at the moment. Any questions that you have on this video, if you have a difference of opinion in silver, then feel free to drop a comment, or you can message me on my Instagram above me, and I'll always be happy to help. I'm always open to listening to other opinions as well. But other than that, guys, the likes on the video are really appreciated, and if you subscribe to this channel, then it will mean you won't miss out on any of this great value that we send out daily at Zenfinex. This is either via myself, KenFX, Macrodesiac. We're pumping out these videos every day for you. And yeah, cheers guys, and I'll catch you all for the next video, which will be tomorrow on the FTSE.